Alrighty. Let's see. Yeah, I think everything's good. Good morning. Good morning. Happy Thursday. Happy NFP week Thursday. Don't we just love this day? Not. So, today is, like I said, the Thursday before NFP news event drops. And NFP, I apologize if I keep abbreviating it and you're not familiar what that is, but it's non-farm employment change. It used to be non-farm payroll, and I still call it that. But that's what this is, and it's one of the most, what do I put? How do I put it? Uh, it's one of the most unpredictable, you know, even though news is already unpredictable. But this one everybody knows about. This one everybody stays away from. This one everybody, if you're a trader, you know what NFP means. It means not for professionals. I heard that once. Anyways, so that's the reason why, and I made a mistake yesterday in the video. I keep watching these videos over after I post them to make sure that I didn't make any mistakes. And I noticed I made one mistake yesterday. So if you caught it, congratulations, you get a cookie. So the mistake that I made is I said that I would stay out of the market until today at 10 a.m. because it had news. But what I was actually referring to is tomorrow, because we have news at 10 a.m. on Friday. We don't have any news on today. We didn't have any 10 a.m. news. We had 8:30 news, but we didn't have 10:30 news. So that's what I meant. So I'm staying out altogether today. I'm just with y'all to comment and give my commentary on price action. Um, I don't know. Like I said, today, like it could be clean, it could be not. That's what this day brings. And if it's clean, am I going to be uh regretful that I'm not taking a trade? No, no, because this day brings so much uncertainty that if you do get something good, I don't feel like it's, gonna be the same, next Thursday, next, no, I mean, next NFP Thursday, and the next one, and the next one, and the next one. Um, and, I don't want to say that because I'm a trader, I've turned into a skepticist, but, you have to ask yourself a lot of questions, because first of all, nobody is going to ask them for you. Um, because I mean, there's not a lot of people that do this industry that would know to ask these questions, and so maybe this is why this is beneficial because I think about this stuff, and if you don't think about this stuff currently, you can start implementing this stuff because this helps me uh basically remain sane throughout all this because I know it's tough, folks. It really is. You feel like it's never going to click for you. It's so difficult. And it is. It is so difficult. Coming into this industry, I did not uh, think that it was going to be as difficult as it was. And honestly, when it did get really, really difficult, where I thought I might have lost interest and fell out of it and just probably, quit, I didn't. I actually pressed into it more. I fell more in love with this industry, this business, and I actually pressed into it more. So that's how I treated adversity within all of this. And if you're going through a tough time right now, it's okay. I promise you, it's okay. Don't kick yourself for not knowing everything because it's okay not to know everything. You don't need to know everything. I don't know everything. Nobody knows everything. Um, you don't have to know everything to be successful within this. You don't even have to be as um, technical as you might think. But anyways, I digress. I'll go ahead and I'll start the actual, why we're here, the real content of this video. But anyways, so today, Thursday before NFP, um, like I said, I don't know how today's gonna go. I have a plan, I have an idea, but we'll see. So daily, we still have this discount wick right here, which I still have measured. Still got these projections up here, which this one hit the first quarter, and this is the next level that we have. Now, do I think it's going to get all the way up here today? I don't know. I don't know, because these seem very, very appealing for NFP. Also, let me ask a question, and I know I don't have an audience, but when I do, or if I do, if y'all could comment what y'all's opinion is, if you have been trading for a little bit, I would say at least a year. If you have been trading for at least a year and following the NASDAQ futures market, let me ask you this. If you watched news this morning, I want to go to a blank chart. This is fine. No. I want to go to, let's just go to this chart. So I was watching and waiting for the 8:30 news to drop, and it was unemployment claims. And I mean, Thursdays in the past for me have been absolutely just, psyche destroyers. Like, I would ruin myself on these days. And it's because, the news candle was so volatile and it caused so much of a displacement that, the price action when it did open up was only hovered around that inefficiency that the news candle really created, and then it would run randomly. So that's my experience with Thursdays on NFP. But look at this. So this is the 8:30 candle. Where is it? Right. Come on. Right there. Right there. You can see it hovering, look down at look down here. Right here. And see the 8:30. So there's the news candle. Does that look out of, like, this candle is bigger than this one. And I'm not saying, they've lessened the volatility of news candles and you should go out there and automatically start trading news. And I'm not. I'm chilling. I don't care. I really don't care. Anyways, this is not what I remember, and I don't know. It could be being held for, NFP and waiting just for this event, and it's being held as far as when it comes to manipulation wise goes. Anyways, so we had news at 8:30 today, right? Yeah, and it gave us that small little pump. But like I said, these are juicy for NFP to me. So I don't know if they're gonna run these today. So I don't know if we're gonna get that much movement today. We might. I don't know. We could. Here's what I'm going to say. My analysis is telling me it's only going to go so far. My plan is it's only going to go so far, and my plan is that how far it's going to go doesn't get us to this daily high. It doesn't. And you can still be profitable in this, and I'll show you within this if you wanted to trade this and not take out this daily high. So daily, like I said, we had that discount wick right here. I'm also doing this. So I know this might be a little different, but this is something that I have, figured out, I guess. I told you I was going to mention a lot of stuff that I didn't share to anybody. So if we look at this pattern, Take these wicks off. Take those wicks off, and what do we have? We have an inefficiency. We also have overlapping wicks here and here. If we treat wicks as gaps, I am just going to assume that this is going to be an implied fair value gap. I am treating this now as an implied fair value gap, which is why it's, I don't know if you can see it on the video. I can see it on my, let me see if I can make it a little darker so you can see a little better. I think that might be better. I can't tell what, I know whenever the video publishes, the color is a bit off because when I watch the videos back, I notice it. So hopefully this is dark enough, but I wanted it to be light enough to where it's not distracting to me because this is huge. This is a huge inefficiency. But I wanted to make sure I had this level, and I'll go ahead and I'll do the upper quadrant as well because I really would like to see it stay up in that area for me to be remain bullish. And it's sitting right there. So let me do this, take that off. It's not going to be exact, but it's going to be pretty close. So I'm going to make that gray. We're going to make that dashed. So there's the upper quadrant of that inefficiency, or this inefficiency, in my opinion. And as we can see, we got up above the midpoint, came back down towards the midpoint, got back above it, and now we're using it as support. We're also using the discount wick quarter, upper quadrant, first quarter, and can't even get down to the midpoint, comes down into this candle's wick right here, overlaps it. We have a small gap, very, very small. I'll actually mark that real quick for you. So, actually, surprisingly, this is a volume imbalance, so this whole thing is an inefficiency. Well, I take that back, folks. So we have a volume imbalance here, and we have a volume imbalance here. ICT has come up with one of his newest confluences, the suspension block. I would mark this as an inefficiency already, but I would just treat it as a fair value gap, which I mean you still can, but this is technically from this candle's opening to this candle's close is a suspension block. So I'm not going to mark that because we have so much other around it that we understand. You don't have to have the levels. I like to have them exact for precision, and I'm amazed whenever it reacts off these levels. But if you have a general idea where these are, I mean you can still navigate price. Anyways, so there's the daily, and like I said, if you're going to be a day trader, if you're going to try to capture, a good portion of the daily range, your initial analysis needs to be on this time frame. It does. It just does. Because this is where if you're a day trader, I mean, you're trying to determine where the daily candle is likely to draw towards. Not predicting where it's going to close, not predicting the high, not doing that, but determining or having a bias, having a plan where this thing's likely to draw towards. And right now, for me, I'm siding on bullish for now, because if it can't get down to the midpoint, comes down into midpoint of this inefficiency. This is the 4-hour, by the way. Now, here's where we get a little bit, when I drop down into the hourly, here's where we get a little bit contradictory. So here's what we have overnight. Look at this. So we have this inefficiency right here. The price is closed above now, but we also have this inefficiency that price is trading inside right now. So what I would like to see is if we can't come back down, trade inside this inefficiency, which I have in orange because since we have closed above it, I am wanting to see it treated as inversion if it comes down and taps it again. And if it can get above, wait, do we have a volume imbalance over here? No. Okay. If it trades above this candle's high and closes on a hourly basis, so that means what? That we would have to wait till 10 o'clock to determine where this thing. Now, obviously, if it's up here at 950, unless we have like a major run lower, which usually isn't the case, I'm gonna, confirm that this thing wants to draw higher. And in my, like I said, analysis, that's where, I'm wanting this thing to go. Anyways, so we have this on the hourly. This is where I would stop right now as far as lower time frame goes, because this is kind of iffy. It's kind of, just sideways, wishy-washy, which, like I said again, is what this day sometimes brings. But anyways, we might stay on the hourly for, the open to see where the opening range ends up. But anyways, so I was continuing. So also, once this thing, because if we measure from this low to that high, this high to this low, excuse me, and we get equilibrium. Here's the cutoff, folks. If you're bullish, remember what I said about discount and premium? If you are bullish and you're looking for longs, you want to enter in a discount. If you are bearish and you're looking for shorts, you want to enter in a premium. So below this line of this range, which is the range we're in right now on the hourly, it's the same range we've been in right there. So we're in this range right now. So if we are expecting it to gravitate up and we want it to see higher prices, and we want it to keep driving higher above this high, does it have to happen today? No, but we do want to see it gravitate upwards towards here so it can confirm our bullishness, our overall bullishness. And I said right now I am bullish for the time being. So if you can't find a setup below here, and I'll keep it on there. I'll keep this on here actually so y'all can see it. So if the setup is not below here, or if there is not a single fair value gap completely above here, the first one, the very first one, after that, I would not consider entering anywhere in this area right here because, like I said, we're in a premium at that point. So, what am I saying? The setups are going to be down here. Setups are going to be down here to go long. Setups to go short are going to be up here. Now, depending on what the bias is going to, let you know what side of the market is going to, it's going to be easier to, what's the flow? So let me put it this way. I don't know, how do I explain this? So if you, let's just say, and I'm on paper right now, so don't worry about it. Look, I'm on paper. Paper trading, don't worry about it. Anyways, so if you just, and I'm going to just do one. If you do this, so let's say you're bullish and you want to gauge if the market, is in fact, bullish. You want to gauge it and you're in pre-market. Here's what you can do. Buy it. Throw one micro contract in and watch price action around your entry. And just study. Is it showing strength? Is it showing weakness? Is it having a tough time reaching for things that I would like to see if I was bullish? Or is it easily driving through things that I would like to see driven through if I was bullish? Like that high right there. Is it going to drive through that high and keep going upwards towards this high? Or is it going to fall short after driving through this high and then attack this low? That's what I'm saying. So watch. Let's see what happens here. Because we're inside this hourly inefficiency, which is a bearish fair value gap. So this is sometimes something that I used to do this where I was learning still, just because I thought it was a cheat code that if, you know, this was good, if my performance was good in this uh, in the morning and I had a bias that, I was, it confirmed my plan, which I mean, it still can, but I kind of utilized it as, you know, it's a, it's a secret and nobody knows about it, but there's nothing secret about this. It's not that fancy at the end of the day. Watch this wick. I'm watching this wick. See if we can stay above the midpoint. If we can stay above the midpoint. Nope. So now we're falling. Now we're coming back down after taking this high. It did not go after this high. Did it show a willingness that it wanted to keep going up? Not really. So what does that tell you? Does it tell you it wants to go up at this moment? No. So if you're in there buying this, why are you buying it? First of all, I think we're too close to market open for any entries. Unless, you are a market open cowboy. And I mean, if you've studied market open and you practiced, how to navigate it, dude, that's awesome. Because I wish I knew how to do that. I'd sacrifice some of my risk too. I mean, because I know I can always add to it. But if you're one of those people that buys or sells straight from open, and you do your analysis for, the actual market open, uh, dude, you're ballsy. Let me put it that way. Anyway, so I'm about to close this because I just wanted to make an example of, what, an exercise that you can do to gauge the market environment, how things are, or how prices acting, in pre-market session. I told you yesterday, pre-market can tell you a lot about, what the opening, the morning session, excuse me, is going to be like. So let's go back to the hourly here because I want to explain one more thing before I move on. So in the hourly, once we traded above this high right here, the swing high, bias has market structure has shifted bullish again. But we are still inside this inefficiency here, so I want to see it, showing willingness to, get above it or come back down, touch this, um, inefficient, inversion fair value gap, and then stay above the midpoint of it, and then show us a willingness to gravitate higher. That's what I would like to see. But like I said, anything can happen, on today. Let me see, let me see. What else? What else? What else? Okay, so from this, so the next thing I want to say is, or the next thing I want to point out is that, if my bias is bullish and I'm wanting to gravitate up where, up, obviously to the upside, how far can it go? Well, you're never gonna really know exactly unless you're ICT, in my opinion. But like I said, if we use what we learned yesterday or what I said yesterday, we can use standard deviations and projections. So from this swing, which is the old swing that we were in and we broke out of it, from this low to this high, I have -1 standard deviation measured. And where is that sitting? Right at the upper, the first quadrant, or the first quarter of this price swing. So when I have a layered confluence like that, especially when it comes to targeting basis, I'm going to treat that pretty seriously. Um, right here, this is respecting this hourly fair value gap for the time being. But anyways, when I did this and I saw that, I was like, okay, well, this is telling me if it's gravitating up here, as far as how high it can go, for me, that's how far I am, confident that it might go. Past this, I don't know. So, what does that mean? If I'm trading today, I have to, look for a setup below this line, aim for here, and then be satisfied that even if it does gravitate higher, that I wasn't a part of it. Because you can be profitable from right here, which I'm just assuming that, like I said, you can get in somewhere down here, but below this line from here to here, that's enough for profitability. 25,834, 25,938, that's like almost 100 over 100 handles. It's 104 handles. You can find 30 handles in that. I think the trade yesterday, would we say 36 handles? You can find 36 handles in that. Like I said, you gotta be patient and you gotta wait for a setup and a good setup, and you don't even have. And here's the thing. I mean, a setup could never form, and this thing could just scream up there from get go, and from there you have to determine, what you're going to do. And for me, I would just be like, oh, well, they did it. And that just shows me that, on Thursdays, they don't want to see people win. They really don't. And that's where I'm going into this. And like I said, I know I sound like I'm a skepticist so much, or a pessimist when it comes to this, but I have to think like that. Because that is what makes me a smart money concepts trader, because I prey upon retail logic. So anything that somebody tells me that, I ask, what do you use as far as concepts to trade? Oh, I use RSI, I use Wyckoff, I use Elliott Wave, I use all this. I use stuff that I don't use, stuff that retail logic uses, and that I just not familiar with. And I was always taught to target those individuals. So whenever, these days come about, and they are, not typical of what I usually see in these, it makes me wonder, are they really, is this really, a good environment, or are they artificially making this a good environment so that the next Thursday of NFP week, they have the freedom to literally do whatever they want with it, because traders are now trusting that Thursdays are a tradable day. And I kind of had a situation like that. There was a Thursday of NFP week. Hold on, actually, I know I'm starting a story, but I want to finish up my analysis. So, anyways, I need to see it. Like I said, I would need to see it get above this inefficiency, and then show a willingness here. Like I said, it can come down, touch here, and then gravitate higher. It can come down as low as the midpoint of this, wick. It can come down there. I'm still going to be bullish if it does that. Like, here, let me put it this way. I am still bullish for the time being until it gets below this low. Till it gets below this low, I am still bullish. Okay, so hourly. So this is my, essential draw and liquidity target, if you want to call something like that, for the time being. Like I said, anything can change, market open, but that's where I am studying right now. Right here, this is the range from pre-market low, lowest low, highest high. So this is the range where we're in right now. We have this blue box, which is the 4-hour breaker. I have the whole thing highlighted now since we traded down into it, and then we left it and closed above it. I want to see it stay in the upper quarter. If this thing is bullish, this thing needs to stay in the upper quarter and not get anywhere lower than this. Because like I said, if it comes down below this low, unless we have a very solid reaction after taking this low, like immediately retraced. And, this is on a 4-hour chart, so what does an immediate retracement mean? I don't know, 30 minutes, something like that. If it's at the end of a 4-hour candle and this thing's hovering, down here, and then all of a sudden it screams up and causes this big ass wick, or this big long wick, or a big long wick, and closes, then I will treat that just as a stop run. But If this thing comes down below this low and drives it, I'm more than likely going to, believe it's coming down to the new week opening gap and then wanting to gravitate lower. But that's not what I see right now, obviously. So we also have this volume, weekly volume imbalance right here, comes up, stops short of the midpoint. We also have the new day opening gap right there. So let me see. So here is the opening range gap. It's the high right now. And when we open up in 8 minutes, if it stays where it's at, we're gonna have a discount opening range gap. See how it's working inside yesterday's right now? Look at that. Now here's also a big paradigm shift, or something to think about. So here's yesterday's opening range gap. It's traded below it. It's traded back up to it. It's traded lower again. Can't get any lower. Come back up, stop to the high. Now it's trading lower. If this thing breaks below this low, more than likely I would treat that as, bearishness, and this thing would try to gravitate down towards, somewhere down here. Maybe, or, coming down into this inefficiency right here. Maybe not take out that low. It could gravitate, like I said, it could gravitate towards this low, but it doesn't have to take it out. We have this inefficiency here. Like I said, I would still like to see higher prices and bullishness. So I would not like to see this low taken out. I want to see that low stayed intact, or remain intact. Midnight opening price. We got a lot around these prices. So these are clustered from yesterday and today. In my opinion, none of these are, like I said, the end all be all. You need to absolutely take a trade around one of these. Just, study how price reacts around, all of these. So remember, like I said, if we're bullish, so this is today's. I'm gonna make this one bigger. I'm gonna make it thicker so you can tell which one it is. So we'll do that. Actually, no, do that. Actually, we're gonna do that for the 8:30 opening price, so we know which is which. So 8:30 opening price today, midnight opening price today. 1 minute. Remember, if we're bullish, we want to more than likely look for something around or below the midnight opening price, or 8:30 opening price, or 9:30 opening price, somewhere, where we believe, smart money is accumulating positions. So let's see here. Let's see, 15 minute. So I had this low delineated because this was the low of the other day of, yeah, these were the suspect lows that I mentioned yesterday, and look what happens, comes down, hits those. I'm keeping them on my chart because I want to see, if we drive down and we trade lower, do we trade to these lows, fail, and then remain strong, or do we trade to these lows? If we do, and do we give up the ghost and trade lower? So that's the reason why I still have those marked out on my chart. But from yesterday, we have this range. That's the daily range from regular trading hours, which is 9:30 to 4:14. And so here's equilibrium. We're in a discount right now, which is, like I said, again, good for if you're bullish. You want to be entering into a discount. This chart, we got some new day opening gaps clustered up here. One thing that I have noticed as well is if you have new day opening gaps clustered in an area, price wants to more than likely draw, into those. We did stop short of this first presented fair value gap, which is this purple box. It's very, very small. But this is an old first presented fair value gap right there. I keep first presented fair value gaps and new day opening gaps and new week opening gaps, for days and weeks. I don't, get rid of them because price does utilize them, in the future. I only keep probably I like to keep at least 4 new week opening gaps. So that means 4 weeks of new weeks opening gaps. I like to keep 5 new day opening gaps, so a whole trading week's worth of new day opening gaps. And then I like to do the same for first presented fair value gaps. I like to do 5 on my chart at a time. So that's the reason why you can see I have all these, right here. Let's see. Okay, so we got about 3 minutes now. Okay, let's go back to the hourly real quick. Okay. Okay. We also have this inefficiency on the 4 hour. It's respecting it as an inversion level right now. I really don't want to see that. But like I said, we're going to have to study, see how price reacts at the open. I'm actually going to put that green because I would like to see that act as a reclaimed fair value gap. I want to see it, if it can't trade back up into it, get above it again, and then come back down and touch it, maybe. Or, like I said, if it just trades through it again, and I mean it's strong. I mean it wouldn't have to come back down into it for me. Uh, but anyways, we still have a lot of inefficiencies that price is hovering around. Also, from this swing high to this swing low, where is equilibrium? Right here. So we were hovering around it, consolidating around equilibrium, left it, traveled above this high into this inefficiency, and now we're trading lower back down towards equilibrium into this, what I would like to see, inversion inefficiency. Okay, less than a minute. I'm probably going to stay on because I'm not uh, actually going to take a trade. I'm not actually trading today. I'm just giving my commentary. I'll probably stay on here till 10:30 with y'all, so about an hour. Um, but yeah, man, I gotta pee, but it's 30 seconds. So I'm gonna mark market open, and then I'm gonna go to the bathroom real quick, folks. After about 20 seconds now, I'm gonna put it on this chart. I want us fun. So about to see open price. Okay. Why is that? What is going on? Those. What's going on? Why I don't have a background? Oh, I guess because I forgot to put it in. Or I guess because I didn't click it. Okay, so what happened? Traded up, failed to get to the midpoint, dropped. Okay, look at this on a hourly. Here we go again. See, watch around the midpoint of that what I wanted to see inversion level, but we're looking like wants to drive deeper now. It's respecting this. Taking this liquidity, which on the 5 minute on this chart is that low from pre-market. Here's this low as well from even before pre-market from 6:30 in the morning. So basically, London lows right there, or what time is that? 2 o'clock in the morning. So that's a London low. Anyways, like I said, here into this inefficiency, taking out the low from pre-market. Okay. Let's see. Okay. Oh, I said it was. Let me go to the bathroom real quick. Okay, still trading lower for the time being. See here, below the midnight opening price. Yeah, midnight opening price right here. 8:30 opening price comes up, fails to touch the 8:30 opening price. Comes up and fails. Okay, trading higher again. So technically, we do have a fair value gap. And if we, let me see here, because I told you the rules for the first presented fair value gap are that it has to be post 9:30. But we do have equal level lows down here, which is why it was taking this. We have equal level lows on regular trading basis. So in that sense, I'm going to treat this like first presented fair value gap. So if we go here, here, look at that, institutional order flow entry drill. If you don't know what that is, it is a partial entry into a fair value gap. You see how it just wicks in there, just taps in there, and it sends it lower. So that's a signature of weakness, and you love to see that if you are bearish and you're looking for a short and you get a setup, and like I said, it hits that, and your limit order gets filled, or you enter right there, and then all of a sudden it just falls immediately. Oh, you love to see that because it literally gives you so much of a relief that you don't have to worry about it. Because if I see this and I would see this, I would roll my stop immediately above this candle right here, and I probably would take something off because that is a nice run. That is a nice long elongated candle, and like I said, if you're short from that, take something off right now. That is a great run because that's from 764 to 698. So that's 60 handles, a little bit thereof. So below this candle's the pre-market lows again, right here, pre-market lows. So now it's below this, what I wanted to see, inversion fair value gap. This, it was respecting it as a bearish fair value gap, and it was respecting this as a inversion level for the time being. So let me switch this back here for right now, since we're below it. And like I said, I would like to see, where we close at 10 a.m. Because if we close at 10 a.m. and we close below this inefficiency again, and we don't take out this low, I would like to see it draw back up into this inefficiency and then gravitate somewhere towards the midpoint of this daily wick. That's where I would say it would be drawing to if it does do that. Like I said, my plan or my idea was that, for the time being, we were bullish. But ever since we opened, we have traded lower. And we still have 23 minutes, so we still have a little bit of time to, you know, determine where this thing, wants to gravitate to, because this candle is still painting. That's the thing. Everybody wants to trade the open, but, you forget, you have a candle that is, on um, the opposite, the last half, because it's 30 minutes, 9:30, the hourly candle, there's 1 hour. So if there's 30 minutes, you still got, half the candle to paint. So that's why I like to wait till 9:50 because 9:50, you're not going to get, unless there is manipulation, obviously, at 10 o'clock and there's news. But at 9:50, I mean, there's not going to be a wild price move that is going to dramatically change the structure of the hourly candle. So if at 9:50 the hourly candle is like right here where it's at right now, I'm pretty much going to say, unless like I said, unless this thing comes up and absolutely, screams up retraces, then I'm going to believe, it's going to close somewhere down here. So I would be looking for it to draw back up into here with the next hourly candle and then maybe send us lower. But like I said, we haven't determined that yet because the hourly candle has not closed yet, which is a great reason that you should always just be patient and wait. Hmm. Why do you all get these emails from different like crypto exchanges being like, "Hey, you've won this." I know it's probably a scam. Sorry. Okay. Okay. So now we're trading lower. So now we're below that midpoint. It looks like we're going to be taking that low here in just a second. Okay. That is a nice run, folks. Man, that is a nice run. That's just absolutely beautiful. First presented fair value gap. Because it's a 9:30 candle, but we had equal level lows on the regular trading basis that it wanted to take out from market open. So that's the reason why I'm still treating this as the uh, first presented fair value gap. Watch this. Opening range gaps down here. Hold opening range gaps. He wants to draw into that. We also have, what else? What else do we have? Like I said, the midpoint of that daily wick, or this is the midpoint of the breaker. Okay. We have equal level lows down here, folks. Remember that. Boom. Like I said, this was, a significant low. This is a significant low. And as we can see, we have equal level lows down here. So it's gravitating towards this for the time being. Okay. Let's see something. So let's do the opposite. So we took the swings from there to there. Let's do the opposite. Right there and right there. -1. Where's that? Oh, isn't it just delicious? Isn't it? Look, right there, right at those lows. Alrighty, folks. Well, again, my original plan is not panning out right now. So what am I doing? I'm readjusting. And that's what that's what I believe the 9:30 the opening range should be used for. Determining where this thing wants to go. Because I'm not good enough yet, at least, and that's okay. I'm okay admitting it. I don't know pre-market where this thing, is going to go off Jump Street. Well, let me put it this way. I don't know for certain, and I'm not 100% consistent with it. Like I said, 30% of the time, okay. That was referring to my actual strike rate, but when it comes to an initial plan, I'm not 100% right always. Okay, so there's the draw. Here's the draw now. So after it broke this low, biases flip now to bearish for the time being. I would like to see it after it's respected these PD arrays. I would like to see it stay heavy, obviously. And I'm trying to determine where is a good likely level that this thing wants to draw back up into that would be valid to speculate on if there was a setup. And look at that. Can't even get above this candle's or the daily low. And it's coming back down and driving lower below this low again. So in that sense, I'm going to take that off. That served its purpose. I mentioned what I wanted to see if it did trade down to there. See, what do we have here? Look at that. Reacting right there. You weren't in it here. Don't chase it now. Boom. Oh, yeah. Yeah, crush those dreams, baby. Man, I love to see that. That's nice. All right. Here's what I'm saying. Here's what I said these days caused. So this day, literally from 9:30, has absolutely dumped. What? Get away. This thing is absolutely dumped from market open. We had a little opportunity. If you didn't get in there, you're not in this. You shouldn't be in this. It's already too far extended. If you are looking to trade, we would have to wait for a retracement, something into a premium PD array, and then a solid displacement reaction, and then continue lower towards those equal level lows like I had marked out. Anyways, so and those equal level lows, those are from Monday, folks. Remember when I said the opening range gaps? I was really, because if we mark this, I was really confused, or not confused. I was really wanting to see these, this thing we hit, and we have this low, and it stopped short of the midpoint. So if we get below these lows, how far, can we go that we, is logical? The midpoint of this old opening range gap from Monday. So I'm going to mark, I'm going to take that off for right now. I'll mark these lows over here so you can see them visually on the chart. So if you saw this and your drawn liquidity is down here and the midpoint of this old opening range gap, and you didn't get up here and you didn't get in up here, are you right now panicking because you think that you're not going to be able to get a setup, and that you think you have to do something and it's going to just travel down here, so you need to enter into it? Are you thinking that right now? Or are you thinking it's okay? It's okay if it just absolutely cascades down there and doesn't allow me to get in? Because then I would still, be correct in my analysis. I'm going to take the midpoint of this off because it failed to get to the midpoint, which is a signature of heaviness. Falls out of bed, cascading lower, not wasting any time at all, because it's been 15 minutes and it has dropped from the opening price 784. Well, if you want the exact measurements, what's that candle's open? 786.25. Let me do the math. 25,786.25 to right here, the low, which is 25,597.5. 25,597.5. It's almost moved 200 handles, folks, in 15 minutes. That's a significant amount. Okay, so we stopped short of this liquidity. Look on the hourly. Boom. Hits this new opening range gap. Retracing. Or not retracing, but showing a reaction back out of it a little bit. Hits the midpoint of the daily wick. Remember what I said though? I wanted to say if it's bullish, I wanted it to stay above here. So what is my bias technically right now? I'm still bullish. So would I be looking to take a short right here? No, I would not take a short. If it shows me that, it gets below these lows and then accelerates lower, then we'll reconsider something. But for right now, I'm still bullish. Because where did it go off Jump Street? Down. What's the pattern that we like to see for the opening or the candlestick formation? Open high, low close. What's the pattern we'd like to see? We want to see it manipulate, accumulate, then distribute. This could look at it like manipulation. And like I said, it's still coming down into a discount PD array that it's, supporting. By the way, that I was going to show y'all what these are because y'all saw this on Monday. Y'all saw it on Monday, and it did the same thing. It came down and it, treated into it and around it perfectly, and then it used it as, like showed a nice reaction off of it, and it's doing that same thing here right now. So I'm still, like I said, holding on to my bullish bias, because my perception is this thing, could be, manipulating traders. Because they see this and they saw it scream down. They're like, oh man, yeah, this thing's gravitating towards these equal level lows right here. Which, I mean, it can. And that's why I marked them out. And, this is a solid projection down here. But keeping with the plot, the storyline, right now, for the time being, we are still bullish. Because we're still above the midpoint of this. It would need to show, significant strength for us to confirm that again, because after, like I said, this reaction, we're like, okay, well, it's just, retracing lower now. And it could just bang around, for the rest of the day. It could just consolidate because it's moved a crap ton. Yeah. So let's go back to hourly. We're inside the first macro now. Supporting price is supporting or its price is finding support at the midpoint of this daily wick. So watch that, study that, study if it wants to stay above it, or no, that's the midpoint of the breaker. Where's the midpoint of the wick? There it is. Study that. There's that, and I'll show you what that is today. I forgot to show you what that is the other day, so I'll show you what that is today. But we'll study price for a little bit longer before we do that. Okay. See, I was respecting that for the time being, at least. Oops, wrong one. Okay, trading below it now. So if you're bullish right now, which I still technically am, you're thinking the same thing I am. I mean, if this thing can't find support at the midpoint and dives lower, I mean we have this the lower quadrant, and then we have these low or this projection, which is close to those lows that we had marked out. So we also are trading inside this. Like I said, the midpoint is right here. So we could see it spike down below these lows, sweep these lows, and into the midpoint of the opening range gap, which I originally said. But right now, if you're bullish, you don't want to see that. That's what I'm saying. I'm commenting and giving my analysis, but I'm not siding on anything. I'm saying if I'm bullish, which I mean that yes, I am siding on, but I'm saying if I am bullish, I would not want to see that happen. But it can happen. If I do see that happen, that is going to make me adjust, what my original thought was. So I like that right there. That's nice. See if it can get above this candle's high right here. So what do we have? We have drop from Jump Street, or manipulate down here, possibly accumulating down around the. Is it raining? No, I don't want it to rain. Oh man, it's looking nasty out there. It's a good day to stay indoors, it looks like. Which I just might. Anyways, so, and also, if it's had this much movement, let me see. Is it showing a strong willingness after doing that to come back up, or is it staying? Because look at where this candle's body is going to close. See, this is where this day causes a lot of contradictory, because my bias was bullish, and it jumped, and from Jump Street it dropped, took out these lows, took out London lows, and now is coming down into a discount PD array on the higher time frame that is conducive for bullish behavior, but it's not showing a willingness to move to the upside yet, if at all, for the time being at least. So we still need to wait. We still need a lot of more information. It is staying above, and prices, it is getting support at the midpoint of this daily wick and at this box, this shaded box right here, which I've just started implementing this into, like I said, and that's the reason why I haven't really talked about it much, because I am not, like I said, that's what happens when I find something new that I could, possibly use. I study it and I use it, while I'm studying price, and I don't take a trade, obviously, with it. So look what's happening now. We're looking like it's consolidating a little bit. I want to see it stay. Like I said, if we're bullish, and I am bullish for the time being, I would like to see it stay above, see if it can stay above that. Let me put it this way. I'm just going to be neutral because I'm not trading this, so I don't care either way. I'm just going to comment on price action, which, I mean, you can do that if that's your model too. I mean, technically, like I said, I don't require a bias to trade. You don't have to have a bias to trade. If you're a scalper, you can find trades in both directions within any given day. If you're a scalper, if you're using, uh, small enough time frames. What's small enough time frames? 1 minute or sub 1 minute. Hovering around an old midnight opening price and 8:30 opening price. Look at that. See how it, folks. I'm not saying these are magic. I'm not saying as soon as it touches these levels, automatically take a trade off of them. I'm not saying that, but look at what's happening around these levels. Diving deeper. What did it leave though? Equal level highs. Coming down, midpoint of that 4-hour breaker right here. See if we can stay above the midpoint. It's got 3 minutes left. If it closes below that midpoint, or if it stops right at that midpoint, I'll still hold on to the bullishness. Because right now I want to see if that can support price. That midpoint. Same with the daily wick. Like I said, we do have these equal level lows though. Okay. Back down below the midpoint of the daily wick and below that red shaded box. We have this inefficiency right here that couldn't support price. Watch this. See if it wants to draw back up into it, up into the daily midpoint of the daily wick. And if it can trade up to it, see if it can act as resistance and send us lower to the lower quadrant, and also ultimately the lows down here. Watch that, study it. In my opinion, I would not take that trade though, because look, we're already too far overextended. So I would not be looking to take a short right here. But that is what we study. That is what you study. Drawing back up. Did it close below this thing yet? No, it did not yet. So it did not. I thought it was, but look what happened. Boom. Came back up. So this thing still supporting price. Look at where the body stopped within this red shaded box. I know it's small, but look how much look at the precision and the respect of it for the time being. And that's what you want to see. You want to see, respect and precision off of PD arrays that you are wanting to see, have a reaction. So right there, came back up into the midpoint of the daily wick. Spiked up into it, above it. Indecisiveness right now. Is it going to send us lower? Is it going to send us higher? Nobody knows. We're just studying and we're watching it. Coming up at the end of the hour right here. And it looks like this 4-hour candle, unless we have like a major spike down lower in less than a minute, looking like we're going to close below. Oh, no, now it's above, now it's below. See how it's hovering around there? I'm not giving up, like I said, and this is something you got to do as a trader. You either, give up on your idea or you hold on to it. And I'm holding on to the bullishness for the time being. I'm not trading it, obviously, but for me, this thing, this breaker is still supporting price. And it can come down all the way to the quarter level and still send price higher. It can definitely do that. But, these equal level lows and also these equal level lows over here, those are, that's a high, there's a lot of liquidity around this. 4, 3, 2, 1, closes below the midpoint. Okay, so now this is concerning me as far as when it comes to a bullish confluence. So if it closes below the midpoint of this on a 4-hour basis and we're on a 4-hour confluence, more than likely we're probably going to see it gravitate lower towards here, towards these lows. How much lower can it go? As low as the midpoint of the opening range gap, like we pointed out right there. Where is it? This old opening range gap. And even full gap closure. It can come down and fully close this gap because it hasn't. So, we'll see. Now that it's below the midpoint right here. See how it came up? Can't find support, fails, drops. Now we have it closed below this inefficiency. It's not allowing anybody to get in, folks, because I wouldn't trust this right here. I would not trust that going short because of this, because of all this elongation from Jump Street. I would not trade that. I would not chase that, excuse me. And I was holding on to an initial bullish bias going into today. And it didn't happen, obviously. But gravitating towards these lows again. These are the days that I would, like I said, ruin myself because I would be frustrated. Because watch what might happen. Because what would happen to me is that I would be bullish. I'd see this. I'd flip, and then I'd try to chase it lower right now, aiming for this, and then I would try to see if I can't reverse. Or let me put it this way: I'd probably take a trade here, and then I would get stopped out because, like I said, if we are thinking that this is the beginning of the move, let me do this again. We're going to do this visual representation. I'm going to delete these for right now because they serve their purpose. So if we are believing that this is the start of the move, and this is the end of the move, and equilibrium is here, where's the lower quarter or the lower quadrant? Right here. What did I say about the lower quadrant? The lower quadrant tends to get a little bit muddy, dirty, a lot of stop runs. So I would, like I said, readjust. If I was, like I said, younger and a trader, I would see this and I would try to chase it. So I might have entered right there on this fair value gap, thinking, oh, it's, like I said, heavy. It's not going to come back up to it. Which, I mean, this thing could just fall out of bed and drive straight through there. And I've had winning trades in that. It's okay. I mean, but it's not, a high probability for me now. It's still not a high probability in my opinion. But just because it's not high probability doesn't mean it doesn't pan out sometimes. I mean, a blind squirrel finds a nut every once in a while. Broken clock is right twice a day. So look at that. So drawing back up into it, if I was short from there, I'd kind of be not too much worried, but let's see what happens. Because like I said, what happened after this? We left equal level highs up here. Here's equilibrium of this price run. Like I said, from down to here, up to here. I mean, that's clear that this is where you should be entering at if you are trying to enter into this price run. Because look at that. And the thing is, it looks like it's made up. It really does. And it looks like poetry to me, to be honest with you, because I'm just like, how, like, and some people ask me, like, how do you come to the determination to know what to measure? And I unfortunately, I don't have an answer yet other than experience. See, look at this. So if I was short here, I would have my stop right there because these are two fair value gaps. And it could still, pan out like I wanted it to. But with these equal level highs, this being equilibrium, my rules tell me now, obviously, to enter in, if I was going short, that I needed to enter in a premium. We're not in a premium, we're in a discount. So right here, I would be worried. Obviously, I would be taking heat in the trade right now. And it could, like I said, stop right here and then roll over, but I can see it coming up and taking this out right now. Taking that out. Because it knows that a lot of people shorted that. It knows a lot of people shorted that and have their stops right there. Boom. Y'all are out. And watch these highs now. Like these highs. It can still, like I said, I'm still holding on to the bullishness, folks. It doesn't have to take out these lows, like I said. It could be done. Like I said, this could be the stop run. This could be the stop run. We have equal level lows right here. We have this stop run right there. We broke this swing high right here. We have this on the hourly or the daily. I like that. This, to me, possibly could be a setup going long. Okay. I did like that. Okay. Watch this gap if it can stay open. It's got 30 seconds. See, let's watch that. Come on. Don't, don't go any lower. 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 Watch this gap. It's already hit the midpoint, so I let's see if we can draw back up into draw down into it. What's everything pointing towards though? Bias right now is bearish on the hourly or on the 4 hour and on the hourly. So would you be comfortable taking a long right now? I don't know, would you? Are you in the business of picking bottoms? Because if you are, sure. That's the reason why I didn't think this was going to come back down into this fair value gap, because this thing overlapped on the daily wick midpoint. Watch these highs. Watch these highs. Watch it gravitate up towards these highs. I would like to see this gap stay open before it takes out these highs. If it doesn't, then I'm really not confident this thing is bullish. If it fails, comes back down into this fair value gap, stays below this, and that's the reason why as well, stays below this red box, then, like I said, it's going to have a tough time being bullish, in my opinion. 5 minute. Don't have anything. Have this fair value gap on the 5 minute. See if you can't draw up into that. Okay. See if it can't support. See if this candle can't support price right here. Oops. What is this? Hasn't gotten above it yet, so it hasn't validated it as a bullish breaker just quite yet. We did take out those highs though. Let me make this blue because that's the color that I like for breakers. Watch that. I want to see if it can get a candle body close above it. If we can get a candle body close above it, I would like to see it stay in the upper half of it. Yep. 10 seconds now. Middle line, I'll show the upper half of this. Boom. Stayed in the upper half right now. I want to see if it touches it. Yep, touches it. Stays in the upper half. I want to see it stay in the upper half. Stay in the upper half and gravitate higher. If it's bullish. If we want to draw back up into this 5 minute fair value gap, which is above price, I want to see that. Here we have a volume imbalance right here. Stops at this volume imbalance. See if it respects that. Watch this. Watch this volume imbalance. See if it respects it or it can trade above it and find support. Okay. Because we have a low, we have a high, and we have a lower low that takes liquidity after running these equal level lows right there. So upper half. Okay. Can't get up there. Remember folks, this whole thing is a breaker. We also have this fair value gap, which this is failing. So I'm going to take this off. Watch this inefficiency right there. See if you can't draw back down into there. I should have made note of that first because that's where I think it wants to come down to. Because if we look at from this run to this run, because this is the swing point where we're in, this is the swing that we're in. Here's equilibrium right here. Let's see if it can't come down, come back down into, this red box, into a discount. Like I said, I didn't want to see it trade back down into here before taking out these highs, but since it has taken out these highs, it's completely permissible now. Oh, geez. For it to retrace back here, and if it's bullish, I want to see it stay somewhere around here and remain strong. Okay. I should have kept the breaker on because it's staying inside that candle. Staying inside the breaker. Okay. Alrighty. But here's the thing. That's what I'm saying. That's what I'm referring to. This is a perfect example of what Thursdays of NFP look like. So this thing, if it closed below there, I wouldn't have been as confident in it as a confluence. Same thing with on the 4-hour. We closed below the midpoint of this. See how it's, like I said, not as precise? We closed below it on the 4-hour. Now we are retracing, and you can say, oh, but it's, RJ, you're demanding too much perfection. Well, I mean, for me to take a trade and be confident in it, yes, I do demand pretty much perfection. So watch this. And actually, on the 15-minute basis, we're inside this inefficiency. So where's the bias also on the 15-minute chart? Bearish. Like I said, unless you are in the business of picking bottoms, which I am not, I would not be in this right now, at least. Okay? So, like I said, it got up to here, got up into this 15-minute bearish fair value gap, and it can't find, much support past that point. So study it, study this. Also, study, see if it wants to draw back down into here. See if we want to support price. Or this doesn't support price. Because what happened with this inefficiency? This was originally a bullish fair value gap. Traded back down into it. Couldn't find any support inside of it. Traded lower. Traded below it. And then traded back up through it again. And hasn't come back. Has it touched it yet? It looks like it might have tapped it right there. Yeah, it did. Oh, wait, no. Because that's not on that correctly. So it didn't come back down into this, what could be considered a reclaimed fair value gap. Watch up here. See if it can't get to the upper quadrant of the daily wick. Remember what I said about equilibrium, premium and discount of, the conception of the run? Because if it stops short right here, and our draw on liquidity, if you're bearish, is down here, which like I said, I don't have a bias anymore, because I really don't care, and what I saw originally didn't pan out, and I'm not really speculating. So if this is the, this is the run, where are we now? We're back up into a premium. I said, if you're looking to take a long, we want to enter into a discount, inside a discount. But now since we're back up into a premium, we're back inside a premium array. Where's the opening range also, folks? Opening range is from here. Is this 10 o'clock? Where's 10 o'clock? 9, 9, 10. Right here. That's the lowest low. Right here. Right here is the opening range. Look where it's going. Wow. Isn't this magical? So there's equilibrium of the opening range. So if we are bearish, if you have a bearish bias now, and you want to see lower prices the rest of the day, you want to be thinking about looking for a setup up here. If you were bullish, you should already be long. Should already be long. So I'm going to take that off for right now. I'm going to take these off because y'all can still see these, right? So it hit equilibrium of the opening range. And it, I mean, it's not like once it got up to this fair value gap, folks, did it drive higher? No. Is it showing a strong willingness to go any higher? Not yet. Is it showing weakness? Sort of. Okay. So here is what we got. So coming back down into this breaker. If you're bearish, see this swing low? See if it can't get below this swing low. If it can get below this swing low, what can we do? Well, we have this equilibrium right here. So if you get below this swing low, it creates a fair value gap, comes back up into it. We can see it draw down into here, possibly draw down into this inefficiency down here, and then ultimately maybe gravitate lower towards these. Because right now the bias is bearish on the 1 hour and the 4 hour. The daily, it's bullish. It's still technically bullish because it's staying above the midpoint of that daily wick. But 4 hour, bearish. 1 hour, bearish. What do we have? We have a mixed environment, folks. Is that going to be conducive for high probability? No. All right, driving higher into this inefficiency right here. If I was bullish, or let me put it this way. If I was to speculate on this, the only way I would even consider taking something would be before it, after it trades through this inefficiency. It's going to have to show a strong willingness to drive through it. Because like I said, I'm not in the business of picking bottoms. And these down here look really juicy and suspect. It's too close to that to me. And we have this huge inefficiency. So where is it more likely to draw to now? Is it more likely to draw up here, or is it more likely to draw down here? In my opinion, it's more likely to draw down here. So what am I doing? I'm waiting for something to show me where it wants to go now. Because, like I said, original idea wasn't there. We also have this. High, low, higher high. Lowest down candle or candles. Most sensitivity is going to be right here, though. I want to see if it can stay, if it's bearish, below. Oh my goodness gracious. Come on. There we go. Sometimes I struggle. I want to see if it can stay. I want to zoom in on this real quick. If it's bearish, I want to see it stay inside that candle on a closing basis. So this is on a 15-minute chart. You're going to make this blue. And it's also for bearish when we want to see it stay in the lower half of this inefficiency. Like I said, can it come up and draw into this? Hell yeah, it can. Actually, I like that better. Because what do we have here? From this run to this run, here's equilibrium right here. Leave me alone. So we have this inefficiency right here, and we have this inefficiency right there, so I like that. So let's see if it can't draw up into there, and we'll study It's already drawn up into there. So we'll study this. This whole thing is the breaker though. So I mean, technically, I mean, like I said, you can use whatever confluences you like because there's a lot that you could use around here. You could use this as a reclaimed fair value gap. You could use this as a breaker. You could use this as an order block. Let's see what else. I don't know what else. Let me see what I can see anything. But we are back up into a premium from the range that we've created from this morning right here. So for bearishness, or if you're bearish, you're liking that right now. But it hasn't shown anything that it wants to either gravitate lower or higher right now. Look at that. So I'll probably stay on for another 8 minutes because here's the point of what I was trying to say about, this price run right here. I was starting to finish what I was saying. So I would, in the past, take that trade, get stopped out right there, go back to my original idea, it's reversing, take this trade, not pay attention to this, and now be stuck. And now be hoping and praying that I was right. Because I wouldn't want to give up on my idea on the second trade, and I had lost money, and I was in pain and hurt, so I wanted to get it back immediately. And I wasn't just patient enough to realize, today is not the best day as far as when it comes to probability wise. Everything on the higher time frames is mixed. Daily is bullish for the time being. 4 hour is bearish, and 1 hour is bearish. So I would be, I'd be a wreck if I was in this right now. So that's the reason why I'm glad I'm not, or I'm glad that I learned. And I'll say, I'll share one more thing about psychology because it seems like, these videos are half technical analysis and then half psychology, the mentality. And let me first say, what do I want to talk about first? So, there's a lot of people out there that want to become, day traders. And I get it. Because you want to live the life of, doing what you want when you want. And you like the freedom that this gives you. Which, I mean, who wouldn't? That's the reason why I mainly got into it. But sometimes you don't realize that to be successful at anything, it doesn't just mean you have to put in work and put into effort of that skill, business, or whatever. You have to treat it like a lifestyle change. And that's how I treated it. I treated it like a lifestyle change because everything that I was, doing before, it wasn't going to benefit me as a day trader. And so I had to change something. And it took me so long to realize that because, I was telling myself I'm studying, I'm putting all this time and effort into it. I was like doing, 5-6 hours in a day, back testing videos, everything that I could to learn the technical side of this. And I told you, I picked it up pretty quickly, and that's the reason why. But I wasn't successful with using any of it until I began to do stuff differently in my life. And that meant, cutting things out, start sacrificing, and start, actually being a profitable human to become a profitable trader. And there's a lot of people that, have their own methods. To me, it was finding a routine. And if you're a trader that is inconsistent with everything in their life, Like you don't typically know what you have to do for the day when you wake up, or you don't have a schedule for a day when you wake up. Obviously, if you have a job, yes, you do have a schedule. But I'm talking about, a set time that you wake up, a set time that you do something go like activity wise. Like if you go to the gym, do you go to the gym at the same time every day? If you eat, do you eat around the same times in the day? If you have chores to do you get those done around the same time? So, like I said, you can, move on to different tasks. Do you have structure to your life currently? Because if you don't have structure to your life, you're not going to have structure as a trader. And you're going to just constantly be battling yourself as far as when it comes to your lifestyle. And that is going to affect you as a day trader. Look at this. Man, am I glad that I am not in this. Anyways, so what I had to change with me was first, and also bad habits. If you're doing a lot of bad habits, like I told you, I quit nicotine, and that was around the time I started day trading. Because even though, I mean, think about it. Would vaping really affect my trading performance? Does it actually have a direct correlation? And if you think about it, everybody's going to say, what the hell? No. I mean, what does vaping have to do with, being a day trader? And it has more to do with it from a mental and psychology standpoint than you think. Because bad habits are what are going to kill you as a day trader, in the same sense of bad habits are going to kill you as, or it's going to be, it's going to make you a wreck as a human being. So if you treat your life like you treat your day trading performance and your journey, it's going to, benefit you more, in my opinion. So bad habits, stop those bad habits. Or even if you think it's a habit that's hindering you, like it might not even be necessarily super bad, but, or it might not even be bad at all. You could be like, okay, I want to just stop eating fast food so much, which I mean, I don't know if that's considered a bad habit, but I want to stop eating fast food so much, or I want to stop spending so much money, or I want to, save money for the time being and stop, carelessly spending. Doing something like that and taking that same mentality and applying it to day trading, that is going to help you out a lot. So for me, and there was one thing that I did at the beginning, I don't do it now because I'm sorry, I guess I'm just a wuss and a wimp. But I would do cold plunges and cold showers in the morning because I used to trade Forex in the beginning, and I'm going to go over 10:30. It's okay. I'll go over a little bit. But I used to trade Forex, and Forex markets start earlier than indice futures, NASDAQs. So currency futures, the market that I trade now, let me put it that way. So the Forex market would start at, 7 a.m. So that means I would have to get up at 6 a.m. So I would get up at 6 a.m., every morning starting out when I was a young trader, and I'd hop in the cold shower to wake me up, and I heard about it also, and I was big into, and I still am. I think, reading is very important, but I read a lot of David Goggins and Conor McGregor and motivational stuff just to, try to keep my try to keep a positive mental attitude, because I was not in a good place when I started day trading. I was not a let me put it this way, I was hurting. I was going through a rough time. Anyways, so I started doing that, and I started to notice a difference. And it wasn't because I was I don't really believe that the effect was due to the actual, cold plunges or the cold showers. I mean, what's the real benefit in there? Yeah, it wakes me up. But sticking to a routine, sticking to some rules, sticking to something for a certain amount of time, it taught me, and I transitioned that with trading. It taught me patience. It taught me, I mean, not taught me patience. That something else taught me patience, which I'll mention also. It taught me stick to rules, stick to a routine, stick to a plan. And I had a plan, and every morning I would do it. And if I stuck to it, more than likely, I would feel, satisfied, that, I got done what I said I was going to get done. And I did what I said I was going to do. And like I said, if I didn't do it, you feel, a little guilty or feel bad about yourself. It's the same sense with trading. If you do something you're not supposed to be doing and it doesn't pan out and you shouldn't, I mean, everybody experiences that. Everybody gets into a trade and they lose money, get hurt or whatever, and then they realize after the fact, why in the heck did I do that? I don't know why I bought that. I don't know why I sold it at there. There was not logical whatsoever. And it sucks. It sucks, folks. Anyways, so once I started doing that and started having a routine and started consistently doing the things that, led me to be productive in life in general, it helped me be a trader. And there was another exercise that I did for patience. And I know I sound weird doing this, and it felt weird at first, but I literally, I don't want to say meditated, but what I did was to get a good perception of, or get a better perception of time, because time is very important within this business, is that I would every day around probably when I got off work to decompress and to just uh, clear my mind. I would take my phone, put it outside my bedroom, set a timer for 30 minutes, close my bedroom door, have my phone outside my bedroom door, go sit on my floor, not sit on my bed, not sit on any couch, chair, nothing, sit on the floor, close my eyes, not fall asleep, close my eyes and do nothing. I would do that. And I would just, and I would gauge, how long I, felt 30 minutes was. And at the beginning, it felt like an eternity. And it might feel like an eternity for you whenever you're waiting for your setup. But that is going to benefit you so much. It's going to help you out, as far as being a trader, because patience and waiting for the right time is something that's huge within this. So that is sort of the psychology that I wanted to, or the psychology point that I wanted to go over. There's something else that I wanted to, what I wanted to say. Oh, I know what I wanted to do real quick at the end of this. I know a lot of people are into crypto, and this thing, I'm not interested in it. It more than likely, and if I was to side on something, I would say it's going to take out these lows. I was going to say it's going. I'm going to say it's going to gravitate towards here. But anyways, I'm not interested in it anymore. And like I said, I'm not interested today. So with this, let me go. What chart was I open? What layout was I on? Why am I on there? Do Bitcoin. Nope. I had levels on here on a chart layout. Where are we? Nope, not that one. This one? Nope. Yeah. Okay, it is this one. Okay. So I have this, and I know it's a monthly chart, but still. So look at Bitcoin right now. if you are bullish, here's what I'm going to say. Let me put it this way. If you're invested in crypto right now, uh, I would highly, highly suggest waiting. It's too early in the year. Anyway, so we have a low, high, low. This is a monthly chart, by the way. I know I'm predicting a lot into the future with this monthly chart, but look at this. So here is a breaker we have. Utilizes it, sent us higher through all-time highs from, when was this? 2024, from the election. Boom. That's the run from the election, and now we're breaking all-time highs again. Here's what I'm going to say. If we close below 89,677 on a monthly basis, on a monthly candle, we have this inefficiency right here. We also have this inefficiency right here as well, which is on the buy side of the curve, which I like to mark these confluences that are on the buy side of the curve more. I think these are almost more impactful than the ones on the sell side of the curve if you're bearish. So we have that. So it hasn't drawn up into there. It has gone into this monthly fair value gap, which is why we're seeing, a reaction right there. Do I believe it can drive deeper into it? Yeah, it can come up back up to 96K, And I'm not saying, it has to do it, fall out of bed this month. February it could drive a little higher. March it could drive a little higher. I would like to see it stay if I'm bearish, which I don't. I'm not trying to. I'm not. What the heck is going on here? There we go. I'm not trying to, play devil's advocate and say, oh, I'm going to go against everything what everybody else is doing. I'm just literally, I'm analyzing from a trader's perspective because look at this. If you trade smart money concepts and you saw this on a monthly chart, would you be confident in going long at the point where it's at right now? I would not. Now, here's the thing. If it trades up here on a monthly basis and closes above here, yes. Yes, I'd be bullish. Yes, I would definitely be bullish then. And I'm not in crypto. I haven't been in the cryptocurrency market in 5 months, 6 months. And it's mainly because of this. Because I'm not certain yet. And for me to put money behind something, I have to be 95 to 98% certain. And that's what high probability is. And there's always that chance that I did something wrong and it doesn't pan out in my, favor. But that is the risk that we all take as day traders. And if I was to lose, then I'd have to treat it just like any other loss and just move on to the next trade. But that's the reason why I have that line right here. Bullishness ends because right here on the monthly, hold on. Right here on the monthly, we have these two down candles right here. These two down candles so you can see. Hold on, let me zoom in. These two down candles, which is a bullish order block. Bullish order block. It trades down into the midpoint. I'm sorry, this line is the midpoint of that bullish order block. Trades down to the midpoint. Trades actually down to the lower quadrant because if we measure this, I don't have it actually marked out, but you can definitely visually see. Trade down to the lower quadrant. Come on. Right there. Y'all get it. Trades down to the lower quadrant, retraces, closes in November. It closes above the midpoint. When I saw that, I was like, okay, we need to show some type of bullishness activity for me to be confident that we are still, going to gravitate back up towards all-time highs. And we didn't. We stopped and we closed below it. Closed below it here. So we're trading back up into this inefficiency on the monthly. And I'm saying if we trade up into here and then we we start to trade lower, and if we close any candle body below this line on a monthly basis, we're going to attack this low, I'm saying. We're going to draw into this breaker, and from there, we have this candle right here, and we have this first standard deviation, because what I did is I took projections from this swing high to this swing low, and that's why I have this low marked out, because if we break below this low, how far can it go? I'm not saying it's going to come all the way down to 22,000. I'm just saying this is what I have marked out. And could it come down to 22,000? Yeah, it definitely could. Does it have to happen this year? No, it doesn't. I'm looking at a monthly chart, folks. This thing is going to move. No, it's not going to slam down there next month. Well, I don't see it slamming down there next month, let me put it that way. But this would be the first stop after taking out this low that I have marked out. So these are the prices that I have if it breaks below this low that I can see Bitcoin gravitating towards. 61,000, 48,000, 35,000, 22,000. 22,000 is scary, folks. 22,000 is so scary. Just think about how many people are long right here, or right here, or right here, or right here. Think about how many are long. Think how much money they've made if they've heavily invested in crypto. But what does that also mean for the whole cryptocurrency market? If Bitcoin is the blue chip cryptocurrency and basically drives, the crypto markets, if it's bearish, do you want to invest in any smaller cryptocurrency coins? I would say probably not. At least not on the Bitcoin network. Like, if you wanted to try Ethereum, maybe. But I don't like Ethereum either. So for me, in Ethereum, I haven't done as much analysis. But we can clearly see we have this inefficiency right here. I'll comment about this and then we'll close it. I know I keep saying that, folks. I'm sorry. I just get caught up. Because I like this stuff. This is the stuff that I do in my free time. You can call me a nerd. You can call me boring or whatever. But if you want to be successful within this, you got to fall in love with, price action. So we also have this inefficiency right here. So here's what I'm going to say. This thing needs to support price. This needs a support price, and this needs a support price on a monthly basis for me to still feel confident on Ethereum. We also have this breaker. Actually, it's right low, high, low. We have this small breaker right here, but this is inside that, so that's the reason why I like this candle right here. Staying inside the body of this candle for the time being right now, we have this inefficiency as well. So I'm going to mark that. See how I cut through candles, folks? I don't just look at what we have on the right side of the chart immediately. I look back. So we also have that layered. So here is a lot of confluences that are bullish that need to be respected in order for me to feel confident that this thing is still bullish. Because right now, we are still bullish on a monthly basis. We're still bullish. On a weekly, though, we're bearish. On a daily, we're bearish. On a monthly, still bullish. But for crypto, are people holding just for 1 day, 1 week, maybe 1 week? Which, I mean, if you're doing a week, should you be buying anything right now? Unless you are, positioning yourself on a yearly basis that, this thing is going to remain bullish and still gravitate up towards here, I would not just buy crypto right now and hold it for, a couple days at a time, a week at a time. I wouldn't day trade crypto going long at least. Uh, I would I would wait. Like I said, I would definitely wait. Give it a little bit more time. See how it's worked inside this fair value gap? I'm gonna delete this one for right now. It's worked inside this a lot. It's traded up, can't find support, around it, around it. Now it's above it again, and now it's coming back down into it. It should not, if it's bullish, get down back below here. If it does, if it closes below here on a monthly basis, I see it seeking this low, and let's see how far down it can go. So if we do the same thing, and we project from this swing high to this swing low, see how far it can go. That's not right. But holy smokes. We break that low, folks. It's over for Ethereum. It's over. This thing will go to zero. If we break this low, what's stopping it? If we take this low, what's stopping it? 490. What's stopping it from going to zero if it hits 490? Is this a market structure also that looks like it's strong, or does it look like it's stabbed up into there and now it's failing again? Did it show a willingness after taking that high to remain strong? No. When was this run from? That was from April 2025. Interesting. Um, like I said, we're on a monthly chart, so there's a lot of time that is going to be in between looking at all this. But for investing purposes, if I'm going to be buying something and holding it for months on end, I want to be looking at the monthly chart. Now, I will pick a day, I will pick a week, I'll pick a week or I'll pick a day to execute on if I see a setup, but the bulk of my analysis would be on the monthly chart. So that's my 2 cents on crypto. Let's look at this real quick. Yeah, y'all like that? Look at this. Oh, okay. Now I'm really getting bad. Sorry. So one last thing, and then I'm closing this. So that red box is a confluence that I've started to implement. And what it is that we can see here. First of all, there's a model called Turtle Soup that ICT teaches. That's Smart Money Concepts, and it's basically a false break below an old low, and it's a rally. And it's hard to determine. Like I said, turtle soups are one of the hardest, in my opinion, one of the most difficult models to trade. And I have not, even tried to implement it within my own strategy of real money. I've demoed it before. I'm not consistent with it, and so that's why I don't apply it to my own model. But anyways, turtle soups are a false break below an old low, or lows, which we can clearly see right here. It sweeps these lows and then absolutely screams up, which is from 9:40 of Tuesday. Now, what you want to do is both of these. You could do this one as well if you want to, because it hits that one also. But on the opposite side of the curve that you are trading, or that you would, on the opposite side of the run, like look at this. Let's see how it's reacting into this first of all before I close it. It's not using that one as much as this one, right? So that's the reason why I use it on the opposite side of whatever the curve is. I still like this, and this is 950, 1050. Watch this. Watch this, see if this can't send us lower below this low and ultimately gravitate lower. I like this as a reaction as far as when it comes to bearishness. We have a swing low broken there. Fair value gap. We do have this fair value gap here. So if you take this trade, I would highly suggest to put your stop right here, because even though it does tap into here, we want to allow for it to come back up into there. It takes this low. Like I said, watch it gravitate down here. But anyways, we'll check that out here in just a second after I explain this. So anyways, what you're going to want to do is, if you see a run from a turtle soup, you are going to want to take the first or the last fair value gap before the run from the turtle soup. So take the last fair value gap and extend that. So where do we have one right here? So we have this one right here. So this is a turtle soup short. Right here is that run. So let's take this fair value gap and extend it. Let's see what we get. Look at the respect from there. Look at the respect off of that. Let's see. Okay, so that one, I mean, did it have as much of a impact? No. Are they always going to? Well, you have to know which ones to look for. And how do you know that? Or how do you determine that? You just learn, experience, I guess. So that box that I was using on Monday, that it came up, did the same thing. Same thing here. And it was right below the midpoint of that daily wick. So that's also the reason why I felt it was high probability. So if you have that, and that's the main reason why I was saying it's not just experience, it's just, this is here, this is here, this is makes sense that, it's a very sensitive area. See, looks like it's about to take this low out. If you were short from here, highly suggest after it takes out this low, take something off, because you don't know if it's going to take out this low or if it's going to come back up into this and retrace higher into this fair value gap. We also have the volume imbalance right here, and this inefficiency is sitting on this volume imbalance. So it's worked this volume imbalance, it's left it, and it hasn't come back up and touched it yet and acted as a resistance level yet. Okay, so it's come down here. We are inside a macro. So we should see it accelerate lower now. If you're in a short, take something off right now. I'm done though, yeah. So I mean, you'll see, price the rest of the day, see if it can gravitate towards this low and ultimately down here, because that's what I'm seeing is more likely the situation that's going to happen here, unless we stop short before taking this low out, come and retrace higher, back up into this fair value gap, get above the 15-minute fair value gap, close. Actually, this is it a 15-minute? Yeah, get above 15-minute fair value gap, close above it, and then show displacement, towards the upside. Right now, bearish though. Anyway, so there was the business today, folks. Look how it's hovering around this level. Back down, or comes back up and hits the midpoint of the daily wick. But anyways, yeah, that's Thursday of NFP week, folks. That is the reason why I don't trade these days. I had a bias, and it didn't pan out. I, I think we determined, the real draw on liquidity, but I mean, we weren't able to get up here, so we had to wait. We told ourselves we weren't going to chase it, even though I told you that, in my younger days, I would have chased it right here. But what did we have to wait for? We had to wait for it to draw back up into a premium from this low to this high. Premium right here. And now, what did we also have to wait for? Time. The time to be correct. So what time were we waiting for? We were waiting for a macro time, which is 10:50 to 11 o'clock. Here is 10:49. What do we have happen here? We had it come up, take these equal level highs, chop around, just kind of stab back up, not show a willingness that it wants to go any higher for the time being. Like I said, what I say? Take something off. I said take something off below this low, because what could it do? Come back down in here and then gravitate back up towards here. It can still fall, roll over, but if you're taking this trade, be a smart trader and take something off below that low. Because first of all, the day. Anyways, so drops, trying to trick traders that it is going to run, but it's not the right time. It's 10:37. We have to wait till a macro time. Rallies back up into this 15-minute reclaim fair value gap right there. Perfectly, barely inside it, which is exactly what we want to see. If it leaves it, we only want to see it come and tap back into it. Taps back into it. We have a swing low right here. Broken. We have a fair value gap at the time of a macro. We can enter here on this candle right there. Where does our stop have to be? My stop would be right above the midpoint of this wick, right there. And then I would first aim for there, 1.49, and I would take the bulk of my position off at that point, and then I would be stopped out right there. And it would be sort of similar to the trade that I took yesterday. Here's the draw on liquidity, though, down here. Like I said, it can draw back up into here. It can draw back up, into this 15-minute fair value gap. It could reverse. This could be where it reverses. This could be the stop run. And like I said, it doesn't have to take out this. And like I said, on the daily, we're still bullish. Is it staying above the midpoint of the daily wick? Discount wick? Yes, it is. Yes, it is. So in that sense, I'm still, bullish. I still have an overall, bullish bias. But like I said, we're mixed on the lower time frames, or on the lower time frames from the daily, like the 4 hour and 1 hour. So that's the reason why I wasn't, liking, the environment that we were in. But look how it's, you think that reaction shows bullishness or bearishness? That's a pretty strong reaction. Now look, we have a swing high right here, broken. We have an inefficiency right here. We also have a swing point right here. Here's the only thing, though. I would have to see it stay. I would like to see it stay in the upper half of this. But like I said, we're still bearish on the lower, like I said, time frames, the other time frames, and especially the 15-minute. Oops, sorry. So would I be comfortable taking a long like this? No. So that's the reason why I would first side on the bias of, what's currently going on and trade that way. And like I said, if I was to take this trade, I would be, out right there. And like I said, that's what Thursdays do. Or, that's what this week does. It doesn't give you, the logical runs that make sense. Or it doesn't, run to a target. It chops around. It, tricks people, and what do we do also? Where do we come down to? Where did we come down to? So from this range, from this high to this low, we came down, whereas 0.75 or 0.2 came down to where? Lower quadrant. Oops. You can see the line moving down there, right? Yeah. Where do we come down to? Lower quadrant. What did I say about the lower quadrant? The lower quadrant is the hardest part of the move. Actually, no, I'm wrong. Sorry. It's down here. Hasn't gotten down to the lower quadrant. It's gotten down to the lower quadrant of the run right here, which, like I said, if you're saying this is the end of the run also, if you're aiming for this low right here, and you're saying the beginning of the run was right here, lower quadrant is right here also. So it's all about perspective of what your target is as well. But if your target was here and you were short from here, obviously lower quadrant's here and it's having a tough time getting down below there. Same thing right here. If you are expecting it to, gravitate towards this low, starting point's right here, and your setup is right here, lower quadrant is right here. What did I say about, taking something off? Where's this low? It's below the lower quadrant. It's the toughest part. So if you took that trade and didn't take a partial, that's the reason why you didn't get the full thing. And like I said, if you are trying to capture something after this huge run from the morning where it just dumped, would you expect that it's going to run another, how many handles did it say? Almost 200 handles? Would it scream down another 200 handles, or is it going to be slow? And that's, the stuff that you have to think about. But anyways, all right, I have been on here way too long. I apologize for going 30 minutes over, but I just had a bunch of stuff that came to my brain that I wanted to cover. Anyways, so that's it for today. I'm going to go enjoy everything else. I was supposed to have a phone call at 10 o'clock. Oh, they did have a phone call at 10 o'clock. They did call me, so I missed the phone call. So I have to escape, and I have to call those people back. So we'll catch y'all tomorrow. Like I said, tomorrow is going to be, we're going to treat it the same way as we treated today and the whole week. It's going to be very hesitant. Not going to wait till, until news drops to even look for something to speculate on. But today, like I said, staying out completely. Anyways, y'all saw that, this thing is still tradable, on this day. It's just, not high probability like I'd like. And, you saw my commentary. I was like probably 60%, 40%, 60% right, 40% wrong. And I don't like that. If I'm like that, as far as, commenting on price action, I'm not going to take a trade. I need to be like 90 to 95% on point to be able to be confident in speculation. So we'll catch y'all in the next one tomorrow. Today, like I said, I didn't mention the date, but today is Thursday, January 8th. You can see it down at the bottom axis. But we will catch y'all in the next video. Be safe.